The PPI and the retail sales number came out this morning, and that gave the S&P 500 a catalyst to sell off. And the credit risk problem just added fuel to the fire. From today's price action, the market gave us a warning message, and I will tell you what that message is later on in this video. Let's take a look at what the S&P 500 and the other major market indexes have done today. So today we see that the NASDAQ 100 is actually the best performer, and it gained 0.42% or 51 points. And the worst performer is the Dow Jones Transportation, and was down 133 points or 0.96%. The S&P 500 lost 27.7%, and the Dow Jones Industrial lost 280 points or 0.87%. And the Russell 2000 lost almost 31 points or 1.7%, and the New York Stock Exchange lost over 282 points or 1.89%. Now let's go and take a look at the intraday chart here of the S&P 500 and some of the internals and also the VIX. We see that the market opened down, the S&P 500 gap down, and put in a low of the day somewhere around 1 o'clock New York time, then a high somewhere near the 2:30 in the afternoon, and we see that there's a last 10-minute surge here for the S&P 500, and that's probably due to the OPEX, the 0 DTE OPEX. And looking at the new high, new low, there were 350 more new 52-week low than 52-week high in the New York Stock Exchange today, and almost 4 to 1 on the up-down volume ratio in favor of the down volume. And at the opening, near the open, it was actually 19 to 1 or so. So that was quite a strong selling at the open. And the VIX is up in the 26.06 level and still inside of this 20-30 zone. So the market participants are still quite fearful. And also looking at the put call ratio, it is 1.2. So definitely the market participant are quite bearish and risk off. So right now they are buying a lot of puts instead of buying calls here. And there were 1,608 more declining issue than advancing issue. So that is also a quite broad market type of sell-off today in the New York Stock Exchange. Now, if you find the content in this video useful and informative, be sure to smash the thumbs up to give it a like and to help promote this video. And if you are new to this channel and like to continue to see these type of contents from me, then subscribe. Now, let's take a look at the message that the market is telling us today. Here is the cumulative AD line. We see that today the cumulative AD is actually lower than this pivot low here. So it is forming a lower low. But if you notice that even though the S&P 500 was down today, but it closed at a higher closing low. So right now we are looking at this low here, which is somewhere around 38.55 to close. And so we are looking for the S&P 500 to come down, dip below this 38.55 in order to resolve this negative divergence. And we are also getting the same message in the NASDAQ market as well. You see this cumulative AD line is negative. It's closing lower low here, but look at the NASDAQ 100. It actually closed with a gain today. So this is a negative divergence here. So again, we are looking for the NASDAQ 100 to come down and take out this low here. Let me see what that 11,830 or so. So keep an eye on that level because this low will have to be taken out to resolve this negative divergence. Now let's take a look at the emini S&P 500 market profile. The ES here, we see that it put in a poor low here today. Now, yesterday we were talking about the possibility for the ES to come up, tag this point of control, and possibly come up to fill these single print, complete this single print fill here. But today it was actually open gap down, so it never got a chance to come up here. And although it tried, it made an attempt here in the midday, but it did not achieve that. It put in a new low, and also with that last minute surge here in the afternoon, we see that the price actually settled near the high of the day, but the point of control is down here. So for tomorrow, I wouldn't be surprised to see that we will see the ES come down and tag or test this point of control to see would it be able to get a bounce back up And if it doesn't, then I'm looking for this poor low to get taken out. Remember with the message that the market was warning us today, right? This low here have to be taken out in order to resolve that negative divergence. So I am looking at the possibility of this poor low get resolved in the coming days. And here, looking at the daily chart of the ES, we see that it is still inside of this weekly range here. So for the coming days, I'd be watching to see would it be able to come up to this composite point of control somewhere around this 39.75. And if it could get above that, then be looking at this 4,030 area, this upper range of the weekly expected move to possibly get tested. But again, remember the message that we got today, and we basically are looking for this low to get taken out. So I'm actually looking to see and waiting for the ES to come down to this 3850, 3830 area, this zone here, and possibly get into this lower range of the expected move at 3804 for the week. If you're interested in learning how I set this fixed volume profile, and this is a free tool in TradingView. So I put out a video here and go check it out to see how I set it up and how you get access to this tool at TradingView. And looking at the IWM, the ETF for the Russell 2000, you see that it dipped below this trend line once again. And it came down to this 170.75, got a nice bounce and back testing this trend line now. So we'll see, would it be able to come up and test this 176, 177 area, this low volume zone, and get rejected back down. Because I'm looking at this high volume area that the Russell 2000 ETF, the IWM, gonna be trapped in here to bounce a little bit and then come down and break and come down to this high volume area. So unless it could get above this 177 area, then we could see that it might work itself back up to this this low volume zone here and try to trace this high volume area and get back above this 185.70. But I don't envision seeing the Russell 2000 actually could make a move in the last couple of days of this week. Now here's the NASDAQ 100 ETF, the QQQ. You see that it came up to this upper range of the weekly expected move near this 299 area. And right now, basically to see would it be able to get up to this trend line breaks it and come up to this zone here near the 304. Because right now, this is the next area that I have to break above to get into the next high volume area. But again, I don't expect to see that, because remember that message that we saw that it has to come down, and we saw that negative divergence. So I'm actually looking for the QQQ for a pullback and dip below this 285 area and come down to possibly to this 280, into this lower range of the expected move. So once it gets below this 285 or 284, then I'm looking at this high volume area to get retraced, and that could lead it down to at least to this 270 level. And for the SPY, the ETF for the SP500, you also see that it came back up above this trend line here, after it dipped below it. So we'll see, will it be able to come up to this edge of this high volume area? And if it could get back into this high volume area, then we could see a possibility for this thing to come back up to this 398 to 400 area. But again, remember that message that we got today, this negative divergence. But I'm still looking for it to come down and take out this low here and possibly dip below this 378 and into this zone at 374, 375 area. So that's basically what I'm looking at for the SPY. Thank you for watching and stay safe.